Hey, and welcome to Tax Tuesday with the Tax Queen. I am excited to have you here. I'm actually here in Boston. So I'd love if you are here and live, just drop a comment in the chat where you're coming from, and just let me know that you can hear me and see me and all is working well. Otherwise, yeah, it's 10 o'clock in Mountain Time, so I'm going to go ahead and get started. And welcome to Tax Tuesday. My name is Heather Ryan, and I am also known as the Tax Queen. I support digital nomads, RVers, remote entrepreneurs with their tax questions. And this once a month Tax Tuesday is here for you, my viewers, and audience, right, to ask questions and get answers. So once again, if you're here live, feel free to drop something in the chat and just let me know where you're coming from. So I always like to know where people are and traveling. Otherwise, I'm going to just dive in with some of those questions. So question one is, what is the capital gains tax rate on real estate profit on a second property if you're married filing jointly? Does the income for the capital gains rate include the property sale? So capital gains tax rates are either 0, 15, or 20%. So it's capped at 20%. I find most people fall in the 15% tax bracket there for capital gains tax. And the income does include the property sale. So if you have a property that you sell for 200,000, that's adding to whatever income you already make via W-2 or rental or retirement, whatever that looks like. And this is for a second home. For your first home, it does not count for the most part. We get a good break there. But if you have capital gains from a second home, a vacation home, whatever you want to call it, it does add to your income. So that way you are going to possibly jump into a higher bracket, but I still see most people stay within that 15% capital um, gains. And I think it's around 78 or 80,000 to stay in the zero if you're married filing jointly. And then for those that are in that middle, it's like zero, it's 80,000 to like 4 or 500,000. It keeps jumping on me, and I don't remember all those numbers off the top of my head. And then over that, you're going to max pay 20%. So it's actually a pretty good deal. It's very hard to stay in that 0% tax bracket if you're selling property, I find. Smaller things you might be able to get that, like if you're looking at stock sales and stuff, which can also be capital gains, it's easier to stay in that 0%. Are there additional taxes in estate tax for the property sales? So states vary, right? And if it has an income tax, most likely you're going to add it to that state as well. And even if you're not a resident of that state, so if you're a resident of Texas or something, and you have a rental property in Ohio that was, or a vacation home there, and you go and sell it, you're going to have Ohio income tax. So just be aware of that. And then lastly, when do you have to file and pay the taxes for this? Is it a period after the sale or with your annual tax return? So it's due with the annual tax return. That's when you're going to be putting it on your return. I do recommend that you make an estimated payment. So if you think you are going to owe because of this, because of that sale, it was a big property or something that you sold, and you're going to have a say, estimated tax, but you're going to owe tax on that. I do recommend making a payment in that quarter that you sold the property. So if that happens to be right now, we're actually, well, October, so we're in the third or fourth quarter rather. But if you sold it in August, you're in the third quarter. So making payments timely to that sale is really important to make sure that you're keeping up with your obligations, and you avoid any underpayment penalties. So, yeah, hopefully that answers that question. There was a lot of question around selling a second home or it could be even be a rental property, which would be a business thing, but it could be a second home, vacation home, whatever you want to call it. So another question number 2, is Social Security income taxable in a foreign country? I plan to move to Spain in retirement and want to understand how that affects my taxes. So yes, short answer is yes. And each country outside of the United States can have a agreement, right? with the US. So it really depends on that tax treaty. That's what we call it. So that's the agreement between the US and that foreign country. And it really depends on that agreement of whether that Social Security is taxed in the United States or whether that Social Security is taxed in another country. So in this example, this person asked about Spain, and Spain has first right to taxation, including on Social Security and retirement income. So Spain will tax your income, and then you get a tax credit from paying that taxes to Spain on your US tax return. So you will not be double taxed. So that's what the tax treaties are there for, is to avoid double taxation. There are other countries, for example, France does not count Social Security. It counts that as US source income, so it does not tax Social Security. So you can see there's a lot of countries around the world, and I can't necessarily cover them all, but definitely research if there's a tax treaty between that country and the US, and then from there we can determine whether your pension or Social Security is taxed in that foreign country or only in the US. As a reminder, if you are living outside the US as an expat or a digital nomad, you do always have to file the US tax return. US's taxation is based on citizenship, not on residency. And this is kind of an oddity among the world, but just know that that's the case. How do I record my income in bookkeeping software? I have multiple sales avenues, online sales services, and even in person. Can I lump it all together, or should I all be stated separately? So this is really, it's all lumped together. For taxes, we don't need to differentiate it. It's here's your income, that's how much you made, that's that. But I like to see it broken out for those to track the different avenues, right? So if you're a business owner, you need to know what's working, where the money is coming in, and from what source. And so if you have online sales versus services versus Amazon or something like that, even you could break down services if you wanted to see, maybe try to advertise one service is doing better, right? Maybe it's something you didn't think would do really well, but it is taking off. So it's really for your information as the business owner. It's not for taxes. Taxes is just here's your income, here's your expenses, here's your net profit. So the taxes don't care, but it's important for you as the business owner to understand. So it really depends, how granular you want to get as the business owner. All right, fourth question. And if you're here live, feel free to drop in any live questions. I'm happy to get to them. I only have a couple more questions to go. And if I don't get any live questions, then I just keep this short and sweet. But I do like to answer, as many questions as I can. And if you're here live, I'm happy to help you answer anything that you came to the table with today. What ways can you reduce your income tax during years when it is high tax due to something like selling a property? For example, are charitable donations a good service or a good choice? Yes. So really, if you have this is a kind of a broad question, right? So if you have W-2 income, there's really not much way to reduce your income. So retirement contributions are a great way, maxing them if you can, especially if your company has a matching program. So matching those retirement contributions, but again, you're sort of limited. There isn't, a ton of things to do there. If you have a business owner, there's a little more leeway of things that you might be able to do to reduce your income, which then reduces your taxes. But yeah, it's really hard to just reduce income, right? There's too many factors going on there. But if you do give high charitable contributions, just remember charitable contributions are part of itemized deductions, and itemized deductions are pretty high. So we're like at $30,000 for 2024 for married filing jointly. That's really high. So if you have real estate, so if you have a mortgage interest, which could be an RV, you can count your loan interest on there. That's high. If you have real estate taxes, if you have state income tax, which many RVers and even digital nomads and expats move to income tax-free states, high medical expenses, and then high charitable contributions. So all of those things add up to more than that 30,000 if you're married filing jointly, then then you can itemize. But otherwise, charitable contributions are not going to make a huge difference if they're not above that threshold. So that could be a good way. I definitely have some clients that are fit that bill, and it helps. But otherwise, sometimes if you made money and you did well, you have to pay the taxes. And it's really, there's not a magic way to just reduce income. I do work with my clients to do tax strategies. So an individual basis, I learn about your situation and what we can do to help you. Again, W-2 wage earners, it's a very challenging. There's not a lot of things to work with. The tax codes are really set up for business owners, real estate investors, whether that's residential or commercial. So that's really, if you have any of those things, then we can work with you. W-2 earners, um, yeah, retirement contributions, charitable as possible. Again, high medical expenses, which happens. Some people have a major medical issue some years. Yeah, so I hope that answers that question. And then I have one more question to get to. Again, if you're live and you have any questions, feel free to drop them in the chat. I am happy to answer some live questions and stay on a little bit longer if I have interest. So the last question, does it cause higher federal taxes to have a second home that is a recreation, so a vacation property? And if you rent it, if you rent the second property, what is the federal tax rate? So first question then is, does it cause taxes if you have a second home? Absolutely not. There's no extra taxes for having a vacation home or a second home. There's no extra tax on that. So just be aware of that. That's plenty of people have second homes or vacation homes. It actually can be to your benefit because you have a mortgage on the second home. You can count that towards that itemized deductions we were just talking about. So that could be an advantage. Even real estate taxes, if it's in a tax state with high real estate taxes, it could be to your benefit and help you to get to that higher than standard deduction. And then if you rent it, so rental property is just income. There's no specific tax rate on it. In general, when I see one rental property, I do not see a benefit on tax returns. So usually for tax purposes, that rental property is actually a loss. And even though you may see cash from it every month, and it may actually be positive for you on the outside, on a tax return, it's almost always a loss with one property. And the reason for that is depreciation. That depreciation is usually quite a bit, and it brings that it's a high expense, right? So it brings it to a loss. So I don't usually see that necessarily impacting your taxes all that much. If you have a lower income, you might be able to deduct some of that loss. So that could be a benefit, but higher income earners cannot actually deduct passive loss. And we consider rental properties passive income. So it's not something you have to work on every day, right? You're not actively involved. You can be an active real estate owner, in which case it can be really beneficial. But generally, if it's just a second home or one property, it's a passive income. So I hope that answered. We had a lot of questions about real estate sales, and I like to see that. There's a little variety. Sometimes I see a lot of questions about LLC and self-employment tax. So it's kind of nice to see some of that a few different questions. So again, if you're live, I would love to have any live questions. Otherwise, I am going to sign off for the day. I thank you for joining or watching this later. If you are watching it later, if you do have questions, and for the next one, feel free to submit them and ahead of time, and we'll get them on this list. So you will definitely get your questions answered. Otherwise, I'm actually skipping November. So if you're here watching this, I'm skipping November because I will be on vacation the first week of November. So I am skipping that month, and I will see you in December for Tax Tuesday. It's always the first Tuesday of the month. Again, skipping November. So we're looking at December. And we're also going to be 10 a.m. Mountain Time. So I try to keep it the same time each month. And if you can't attend live, that's fine. I do always have the replays. So thank you for joining me today. And I hope this was helpful. And I will see you in December. Have a great fall, everyone.